What's happening, guys? JC with Big Game Real Estate. Today we're going to talk a little bit about hard money. Okay, this is a term that's thrown around our industry a lot. It can be a very useful tool to acquiring your first property or maybe developing your first property. But what are the risks? Okay, we're going to do a few videos on different levels of financing, different products of financing, and how they can all tie together, which one's the best for you. But today we're just talking hard money because we hear it all the time. What's private money? What's hard money? Obviously, if you are pursuing private money or hard money, there's a reason, okay? And the reason is you probably can't go to a traditional bank, whether that's due to timing, you need the money quick, whether that's due to the amount, you're over leveraged on a property, or it's just outside the box. Generally, a hard money lender comes in when there's funding needed that is not typical. Oftentimes this comes as a bridge loan, okay, and a bridge loan could be you need that money while you're waiting for something. And the most common one I see there is you're building, you're renovating, you're developing, and you ran out of money. You know, you did your numbers wrong, and you need an extra 50 grand, you need an extra 5 million, again, depending on the size of your property. Or you're trying to sell, okay? And you're trying to sell your property and things are not happening on time. And maybe you need to pay a mortgage. Maybe you need to pay service providers. You need to pay contractors. You need to pay your property management company while that building is being sold. So again, it's important to understand that private money, oftentimes they will say they have a minimum loan amount. And yes, that is true. But there are a ton of private money lenders out there that will do loans of anywhere as small as $50,000, okay? Maybe even 25. Below that, probably not really, but $50,000, $100,000, all the way up to as many millions as you can imagine. Again, depends on the property. Now, the benefits of using a hard money lender are you're going to get your money fast. They're probably not going to want to know too much about you, and I'll explain why that is in a moment, okay? But they're going to want to know what are they lending on, what's the timeline you need the money, and to put it in layman's terms, what can they take if you don't pay? Okay, so you have a property. You are renovating the property, and you did the numbers wrong, or you were renovating the property and you lost a few tenants due to some unforeseen thing that happened, and you need $500,000. Okay, so you're going to go to a hard money lender, okay? And we all know them, okay? So here's how it's going to work. You're going to say, Mr. Lender, I need $500,000. Okay, great. Lender's going to say, well, how much do you owe on the property? Am I first lien position? Am I second lien position? Okay. Now, first lien position is generally your bank. Who's got the first note on that property? So if you default, who's first in line to take that money? Most hard money lenders are going to want to be the first lien position, especially if you have no experience and you don't have a business, you don't have other assets they can take. Now, let's say they're not the first position, but you have experience, or you have no experience, but you have other assets, okay? And again, it depends on the loan amount and the amount of the amount of the first lien. So if it's a large scale project, let's work from super simple to a little bit more creative. It's a large scale project. They want to be first lien position. They're probably going to lend you up to 50% of what the property is worth, okay? Because if you default, they're going to get their money back. They obviously want to double their money. And they're not going to double their money because they're going to quick sell it for whatever they can get because they want their money back on the street on another deal. Okay. If you needed a bridge loan or a gap loan, let's say, again, maybe you're finishing up construction and you need another 3 months. Okay. And they're not first lien position. So you may be able to strike a deal and say, look, I need, $100,000 for only 6 months. And if you have other assets, a vacation home, a primary residence, or something, even if it has a second position, it has a lot of equity, and that could be the case on the first deal as well, they may loan you money on that, but they may also raise the interest rate. Okay, so generally, an interest rate for a hard money lender is 1 to 2% per month. Okay, there are banking guidelines, federal banking guidelines that there are certain restrictions depending on if you have an LLC, etc. And we'll get into those in other videos. But generally, it's 1 to 2% a month. And again, that depends on the loan amount. Your most of your guys are going to be between that 12 and 18% per year. Also, generally there comes an application fee. This is not your $300 application fee. This is usually a few $1,000s, but you can find guys, especially on the smaller projects, that will not charge any fee. They'll look at the deal, they say, we like it, we don't like it, we'll go ahead and give you the money. Generally, you can get the money in a week or so, maybe 10 days. You're going to have to show them, hey, what are the liens on the property? What are the taxes that are behind? What's the value today? What's the value going to be when you're done? If you're selling it, do you have a buyer in place? Maybe you did have a buyer in place, but they had to 1031 and their previous sale got held up and you have to take care of incidentals. Okay, those things make sense. And again, there's different level of hard money investors. There's guys who will lend $50,000. There's guys who will lend $1 million. Also, those guys who are lending millions generally have a minimum requirement, probably around $1 million, which makes it worth it to them because those guys are probably lending on large scale projects. It's just too much paperwork to lend out 50 grand. But you can find folks to lend you 50 grand. These loans you generally want to stay away from. Obviously, they're high interest rate loans. They're good in a pinch. They're good in a jam. But again, keep in mind, if you get into a jam, a second jam, which I'm assuming it's your second jam if you need a hard money lender, if you default, they're taking something. Oftentimes, in order for them to loan you the money, you are going to add them as a lien holder on that property. So they can start a foreclosure process. Okay, we see this a lot of times in the residential world when home flippers are flipping something and again, they get delayed, timelines are off. We saw it a lot during COVID and they need $100,000. They'll go get a smaller company to lend them that $100,000. Before they get the money, the attorneys will put them as a second lien position or a first lien position on the home, which means when that home is sold, those lien holders are getting paid before you get a dollar. And there's court fees and things like that that you run into, etc. Also keep in mind, when you're dealing with a hard money lender, if they're a smaller outfit and they have attorney fees, which they will, it is your responsibility to pay those attorney fees. So if the attorney charges them $4,500, you're paying the $4,500. They're not going to pay $4,500 to loan you money. Okay, so you're paying the attorney fees. If you go to some larger guys, they may have in-house counsel. But again, this is really just to get you guys started. We hear it a lot in the business. Hard money, hard money, hard money. When to use it. When to use it, honestly, for me, the best time to use it is if you're in a jam, if you're in a bind, you're over leveraged, but you know there's a sale, almost a guaranteed sale in the near future, and you just need a little band-aid, just need a little bridge to get you through the time. There are experienced investors who will use hard money sometimes to purchase an asset if they think they can add a lot of value and maybe they're waiting on another transaction. That's a really high-level play. I wouldn't suggest it in your first couple of go-arounds. Oftentimes, those guys have a relationship. So I would stick to the basics on that. And oftentimes, the other question I get asked from people is, could I use my car? Could I use my boat? Could I use my jewelry? And the answer to that really is, it depends. It really does depend. Most of those things are not assets, they're debts. But if, for example, you have a boat that's worth $500,000 and you get that appraised for $500,000 and you only want 200 grand and you don't owe any money on the boat, or you owe a small number on the boat, like 40 grand, and you're willing to add the hard money lender as the title, they'll be okay with that. Now, where does that boat go while this money is out? Well, it's in the possession of the hard money lender. So you can't be driving your boat out during the summer while you have a loan on it. If they're willing to do that, and some of them are, they're going to come and they're going to drive, or they're going to tow the boat to a secure location where you'll get it back once you pay them off, or it'll be an agreed upon location, maybe under security or something, and they have the keys. Who knows? Cars. We've seen that happen in the past. Usually, it's out of desperation. The guy has to give the title. Oftentimes, you're giving the vehicle as well. And then again, guys, below that, people ask, well, could I maybe do this or use jewelry? I wouldn't suggest it, because then you're really getting a little bit into the gray area of what things are worth. Again, if you're doing a car, you're going to have a Kelley Blue Book value, or if it's a really high-end car, your dad left you an old school classic, it's worth a couple $100,000. It's a Ferrari or Lambo. Yes, there are people who do deals on those. And again, if it's what you got and it's what you need, awesome, go for it. We'll touch on some other videos as to who else lends money, guys. It's not only hard money lenders, it's not only big banks, it's not only regional banks. There's life insurance companies that lend money. There's a lot of different things you can do. But for now, we're talking hard money today because it seems to have come up lately in conversation. I know this was a lot of information in this video. See you guys on the next one.